Hello, class, and welcome to the Chapter 9 Sample Problems Part 2. We did the first part in class. So here's a couple problems that I wanted to go through. The first problem I want to talk about is problem number 2. So in the slides, and in the chapter, they talk about what is called a sensitivity analysis. And a sensitivity analysis is where you take your basic static budget, which we've already learned about, and then you say, well, what if I were to change this item on the budget? Or what if this were to happen? So a sensitivity analysis is a generalized term for saying, hey, let's look at this and see what happens if our sales were to increase by different amounts or decrease by different amounts. Also, with sensitivity analyses, you might look at, well, what would happen if we had this level of costs or if our costs for that particular item change? So the process of a sensitivity analysis is just looking at how your budget would change based on different budgetary assumptions. And in general, a sensitivity analysis can include changes to both sales levels and to cost levels, okay? Or costs per item, right? In this problem, we are looking at a flexible budget. So a flexible budget is a type of very particular type of a sensitivity analysis where really you're just looking at different sales levels. So your variable costs will change because those change based on the numbers of items that you sell, but the actual cost per unit is assumed to stay the same. So that's how it differs from a typical sensitivity analysis. So it's basically just looking at taking your static budget and altering it to look at your organization's results under different levels of sales. Okay, so the primary thing you're changing in a flexible budget is just the sales levels and then how that affects costs that are based on sales levels. So here's the information from this problem here, right? We've got sales levels here that they have asked us to look at. They provided all this information here. And then they ask us to look at what would happen to our budget if we had some different sales levels. So they look at here some 2 different levels of sales, less than expected, less than our static budget. And they also look at 2 different levels of sales above the static budget. Okay. So I'm just going to change the formats on these ones too, because it's a little easier to read. Whoops. Hold on. There we go. Wasn't letting me see my box there. There we go. All right. Okay. So I figured out what these altered sales levels would be here by taking the base sales level. And here I multiplied it times 0.75 or 25% less. Here I took it times 0.9, which is 10% less. So 1 minus 0.1. And then here 1 minus 0.25. Here they wanted us to look at sales levels that were higher, so multiplied it times 1 plus 0.1 or 1.1, and then multiplied it times 1.25. Now, I coded all of these when I entered them in here, knowing that this total revenue number on our static budget was based on the amount per unit, okay? And that this is a combination of the per unit cost and the number of units that we sell. So I'm actually going to code this here so that it keeps my reference to the costs in that column here. And actually here, I'll just do this. I'm going to leave just the B there and not the 4 because I want to copy these ones down and make sure nothing's going to change. Okay, so these numbers didn't change, but I added in a $sign here to lock it onto column B. So whatever the $sign is before is locked. So this is locked onto row 3 here, so that when I drag it down, it'll still continue referencing row 3. In this part, but I didn't lock the C because I wanted to be able to drag this over to the right and have it copy. And then here, I don't want this to drag over here, but I do want it to drag down, did want it to be able to drag down to other rows. So I left that one as a, with a dollar sign as a B and no dollar sign for the row 6. Okay, so now if I take this and I copy this over, it is going to tell me the revised sales numbers. And so now this is referencing still the per unit here, but now the new columns units up here, okay? And same thing over here. So this is one of those like, hey, I have to do a bunch of these. This is such a pain in the butt. Let's take an extra minute on the front end to code our static budget here so that we can copy this over. I'm going to actually take all of these now and drag these over, and we'll quickly find out if I coded any of these wrong. And you can just double click on it and see which cells it's referencing, and it'll light it up here for you. So this is a really quick way of doing a flexible budget that just makes it a lot easier here. And then this should be taking the difference between the revenue and the total variable expenses. This one should be, oh, this one's, well, there's two ways you could get the total variable expenses here. You could either get it by taking the number of units times the total variable cost per unit, or you could do it by adding these up. So we see here it's 56,531,250. If I highlight those and look down here, 56,531,250. Okay, so it's calculating the right sum there. Always good to do those double checks. And then down here on our fixed costs, those are actually going to stay the same here, right? So I should see those just copy over dollar-wise. And now if I drag this over, this one is coded to take the contribution margin total minus the total fixed costs down here. So now we have done a complete budget here. I'm not going to type all these in here because you can see what they are. I encourage you to experiment with doing that yourself. It will make your life easier on the homework if you set up something like this. Like these columns here, you can probably save it and reuse it for homework problems. So just something to keep in mind. Yeah, so that was problem number 2. Just nice, easy one to walk through there. But all we did here was look at, all right, a flexible budget. It is a budget that is calculated at various different levels of sales to see what will happen under those different sales levels. And the difference from a static budget is that you have you've calculated your budget at multiple levels of sales. All right, we already did number 3. The next problem I wanted to look at is a sample cost of goods sold budget here. I accidentally paused that, but we'll restart. Anyway, so for problem number 4, we have a sample cost of goods sold budget that we are asked to produce. But unlike the earlier problems that we did, they didn't give us all of the different sub menus and sub budgets pre-prepared, right? So if you recall, I'll just pull up a previous problem and just as a quick refresher here, right? When we did to prepare our cost of goods sold budget in actually problem 1, I think it was. Yeah, so problem 1 walked us through a cost of goods sold budget. And first we had our bill of materials that told us what it cost per unit to produce or for the raw materials for our different goods, right? We had the root sheet, which if we look at that one, is the minutes of labor, right? So this was for direct labor to figure out how much our labor costs. And then we also had an overhead calculation where we looked at how much manufacturing overhead would get charged for different items here, right? And there we go, scroll that down so you can see the whole thing. basically they said, hey, for these many units, we have some variable overhead, we have some fixed overhead, and here's how all of that shakes out at this number of units. We also looked at non-manufacturing costs. And then finally, we used all of those items to add together and put together a cost of goods sold budget, okay? So in this problem, they're giving us, we had to come up with the format in problem number 1, but in problem number 4 here, they're actually giving us the format, but they're not giving us all of these, right? So we have to look at the information that we're provided and kind of figure out what are the different parts that we need to put together here. So we've got Pelican Recreation. They're producing and selling kayaks for recreational use. Average sale price for the kayaks is $250. All right, so let's take a look at a sales budget here, right? If it's $350 per unit, and we are expecting to sell 50,000 units here. So that gives us a sales budget of, I'm going to put in my formatting here again. I wish Excel just defaulted to formatting numbers. It'd be super nice. Oh, my box is not coming up again. There we go. So just please include the thousand separator for those of us who would like to have it for reading purposes. Okay, so 300 and, oh, sorry, I put 350, 250. All right, so a little typo there. Here we go. So we expect to sell 50,000 units this quarter. And ending inventory is planned to be 3% of our expected sales. Okay. Note that. So if our expected sales are $50,000, 0.03 times that 50,000 means in terms of units, it's going to be 1,500 units, right? So now we need to put together here a production budget, okay? So all of these items, we looked at different costs in problem number 1, but really what we need here is to know how many units we need to make. So let's figure that out. We're going to take our beginning inventory in terms of units, and we're going to add in our target ending inventory, and that's going to give us our required units, okay? So let's see here. At the start of this quarter, the company had 1,000. Oops, I'm sorry. That one should actually be. I'm getting out a lot of sorts here. Okay, sorry. Our budgeted sales plus our targeted ending inventory is how many we need. 50,000 plus our target ending inventory of 1,500. So we need at various points during this period 51,500 units, okay? And then we already have 1,500 units, it says, right? No, 1,000 units. All right, so that tells us how many we need to produce. Okay, so we need to make 50,500. All right, so our beginning finished goods inventory we had, and this is all in terms of units here, right? So here, our cost of goods sold is going to be in terms of dollars. So we need to convert our 1,000 units of beginning inventory here, whoops, 1,000 into dollars. So let's take a look. So for direct materials, it's going to be $15 per unit. Direct labor rate is $19 per hour, and each kayak requires 30 minutes of labor. So for direct labor, it's going to be $19 per hour times 30 over 60, or $9.50. And then overhead is applied using direct labor hours at $6 per hour. So it's going to be $6 times 30 divided by 60, or $3 per unit. Okay, so the total then, as far as costs per unit, I'll just add a line here. Is $27.50. Okay, so units and the dollars are going to be down here, the 1,000 units times that $27.50 per unit, or 27,500. So now we've got our beginning inventory in terms of dollars. And then from a production standpoint now, right, we've got 50,500 units that we are producing. So $50,500 times $15 in direct materials per unit, which I am grabbing from up here and was provided to us, gets us 757,500 for direct materials. So I'm taking those and multiplying our 50,500 units times the cost per unit for each of these: direct materials, direct labor, and manufacturing overhead. And so my costs for manufacturing labor, $479,750, and for direct manufacturing overhead, $151,500. And I'll copy these here so that if you need to, you can see that formula and pause the video, see where that came from. And I'm just taking these numbers right up here. Okay. All right. So then the last thing is our ending finished goods inventory, which we figured out up here was 1,500 units. So let's take that 1,500 units times our cost per unit of $27.50, and that gets us $41,250. Just copying these formulas over in case anybody didn't catch those. All right, so this was just an example walking through, hey, throwing together a cost of goods sold budget when you're just given some information and context, remembering that the first thing you need to do is figure out, okay, what goes into your cost per unit up here. And then also when you figure out the number of units, you got to use a production budget format where your budgeted sales plus your targeted ending inventory is your required units for the period. And then you subtract out what you already have to arrive at what you need to produce. All right. And I think I'm just going to leave on that for those two problems. That should help you a little bit with getting going on your homework. And we'll do the last couple problems, 5 and 6, on Monday.